Let's take a handle of what the HNI fraternity is doing, how is wealth being managed, and who better than Anupam Guha, Head of Private Wealth Management at ICICI Securities, joining in right now. Anupam, hi, morning. Been a while since we chatted and lots has changed in the market. How's life at the wealth management end?
Yeah, hi. Thank you for having me at the studio, at the channel, on the HNI side, Aisha, obviously, you know, the HNI community is also affected by what's happened in the markets for the last 12 odd months. There has been sharp volatility and sell-off that has happened. But I think the HNI space, especially the HNI investor, I think given his experience in the market, you know, has seen cycles. And I think if you see in terms of their allocation today, if you see liquid fund as a category in the mutual fund space, I think it's almost swelled to close to 6 lakh crores. In the last few months, we've also seen you know, a lot of money coming in arbitrage. So I think the way we are looking at it, they are on the sidelines. They are waiting for the markets to stabilize and to come in.
Okay, fair enough. So waiting for some stability. During that time, then Anupam, would you be looking for value in the mid-cap space? Is it still too soon? How would you advise investment in that part of the market?
So essentially, the way we are seeing at it is essentially the fact that I think in the last few quarters, what's become evident is the fundamental difference between what investors are chasing or how the markets are pricing is essentially the difference between good quality businesses and ordinary businesses. And I think it is there that today the investors are wanting to look at quality as a foremost. So they are wanting to invest into companies where they see opportunities of strong balance sheet, they can see visibility of earnings, robust management, corporate governance, free cash flow. And I think those have become far more important when investors are looking at investing. So from I really do not want to get into the small and mid cap, debate, so to say. I think for us, the way we are advising our investors is to look at across market cap. So our engagement with our investors is largely to look at quality. Having said that, in the mid and small cap, given how the corrections have been, some of good quality counters have got beaten down, and I think it is there that some bit of value buying can happen. But on an overall basis, if I were to summarize, I think investors are becoming more conscious of what they're getting into and just not investing basis returns.
Makes sense. But Anupam, when it comes to asset allocation, real estate for long has not given you any returns. Prices continue to be very depressed for real estate as an asset class with no sign of recovery really coming in. Equity again is a confused scenario. You don't know when the recovery is going to take place and more importantly, where, within which pockets. Having said that, gold as an investment has given you decent return in 6 months. At a time like this, when you're sitting at a very risky scenario domestically as well as globally as well, are you advising clients to increase their allocation perhaps a little more to gold?
Okay, so on an overall asset allocation basis, so while you spoke about the volatility and concerns on equity, but I may just want to say that we continue to be constructive on equities as well. So while money is there, on the sidelines, both in liquid and arbitrage, but if you were to see on a domestic basis, we are in a benign interest rate scenario. Inflation is under control on a declining space. We've had good monsoons. Stable currency, crude is kind of, extremely soft. Also on the global side, except for, the US-China tariff war that's going on, which continues to be the unpredictable, angle, so to say, from an overall overhang on the equities market. I think what we are engaging our investors to really look at is also to not move away from equities per se, right? And as I said, that the HNI community has largely been investors who've not wanting to time the market, but essentially they understand that it's the time that you spend in the market that's important. Having said that, on the equity bit, gold, obviously there's been a rally given the volatility, and which has always been the case. So there is a natural affinity for investors to park their money in gold, and hence we've seen more flows coming into gold as well. On the commercial side, I would say that in the HNI category, we are seeing interest in yielding assets on the commercial side, and resi obviously does not make sense for an HNI to invest into. So that's broadly, the overall allocation basis. And obviously on debt, how the investors are looking at, I think credit continues to be a cause of concern for all of us, and I think hence clients have moved into safer havens. So they are looking at AAA papers. If you look at even in mutual funds, the corporate bond category has received a lot of money, and I think that's the trend on the debt side as well.
Okay, fair enough. On the debt side, I mean, you've been talking about perhaps a move from corporate bonds to AAA tax-free. Just talk to us again about the trend that you perhaps see on that end of the market.
So essentially, what's happened on the overall asset allocation basis, and which typically happens when the going is good, and you have a secular trend of returns getting made in the market. People tend to start from, digressing from their core, asset allocation, which essentially means that while there is, an allocation to say an equity and debt, people tend to move a little bit more on the riskier assets. And likewise on the debt side also, investors had started moving or had started chasing returns and had started giving higher allocation to credit. And we all know that, with some of the names defaulting, there is issues on liquidity, NBFC, all of those, people have realized that they really need to look back at their core allocation and how they've constructed their portfolio. We feel that from credit, money is moving or has moved into safer havens. You've had arbitrage funds which till recently were giving close to 6% odd return. You had liquid funds where people had parked their money, and on the debt side, there is still there is a gap on yields on the corporate bond side. So the corporate bond side and the PSU bonds both are getting money, and that's how clients are investing and looking at their overall allocation.
Anupam, I understand that HNIs are not allocating any fresh money into equities right now, but have you seen any redemptions of any sort? I mean, just trying to gauge how bad is the sentiment really out there when they are actually tightening their purse strings to such a degree that there is actually redemption from certain asset classes altogether.
So initially, so I honestly am not as pessimistic on the markets as, because I think even the HNIs understand that sometimes when you look at sentiments versus fundamental, there could be a big gap and sentiments can change very quickly. And which is, I'm coming back to the point that when I look at the positives on both the global and the domestic macros, we think that it is only a matter of time that this sentiment would change, because people will start seeing logic to where we are, and in many cases I think we are in an oversold zone. So from that context, at least the HNIs are staying put. I would believe that at least from our engagement that we are doing on ground, we are asking our clients to be more patient and to tide the volatility. And I think we all understand that smart money comes in at these volatile times. And that is how, if you chase quality and if you reconstruct your portfolio, there is money to be made in the medium term.
Sure. Okay, Anupam, great to have you on the show with us today. It was important to really get a sense of, that conviction is still strong when it comes to an equity market recovery. And it's not like there is complete gloom and doom, at least within the HNI fraternity. That's the word coming in from ICICI Securities Wealth Management. Anupam Guha chatting with us.